Welcome to the Seattle Investors Club podcast with Julie Clark and Joe Bauer, where we share the nuts and bolts of real estate investing from our 20-plus years in the industry. Sit back, relax, listen, and immediately take action. Are you ready? Here we go.
Welcome to the Nuts and Bolts of Real Estate Investing podcast. My name is Joe Bauer, and I'm here with my co-host, Julie Clark. Julie, how you doing today?
I am doing pretty good, Joe. Honestly, while we're all here stuck at home and life has slowed down a little bit, I actually, in a crazy sort of way, feel less stressed only because of due to, can't race around and take on as much at this moment. And therefore, I've replaced all that with more exercise. So, I'm following your lead there. I'm actually feeling healthier in a crazy sort of way right now because I'm exercising so much to keep my kids outside. And of course, our sidekick Buddy is the big winner in all this right now, having his family at home and taking long walks every day. What are you guys up to since all the national parks are closed? Cramping your style, man. What are you guys up to?
Oh my gosh. Yeah, we got closed out on the campgrounds, which is kind of silly, but another topic. And we jammed up to our cabin in Chelan that nobody had been at. And it's like half renovated right now. So if you were to look at it, you're like, oh, half of the flooring is done. Cause it's kind of like a do it when you can self-improvement kind of a deal. But it's beautiful. Got an amazing lake view and up in the orchards here. So I can't complain at all.
And what's the behavior of people over in Chelan? Are people doing what they need to do and staying away from each other? Or are you seeing people gathering on the lake and things like that?
Well, I don't know. We're kind of up in the orchards. So I don't see if there were people gathering in the lake, but I can tell you that when we go to do our grocery pickup, because we've been doing the order online and then go pick it up, which is just awesome. But the parking lots for all the grocery stores are packed.
Right.
And I don't understand why people are doing that.
Exactly. Well, one thing that's come out of this for sure for me is I probably will never go to the grocery store anymore. I'm used to forced to do the online thing. Why not? Why would I ever go back?
Yeah.
Oh my gosh. Totally.
Heck yeah.
So, all right. Well, we're not going to focus on what we should all be doing and not doing. And we hope and very much hope that you're all doing very well. And this is an excuse to sit back maybe and get educated on important topics that are going to affect your life, affect your business going forward. And one of those important topics is seller financing. And today we have some experts on the line with us here. My co-host, I am so excited to let you know my co-host today on this important topic about seller financing and note investing is Mariska Pilch of Evergreen Advisors. Mariska, along with her husband, Larry Gill, that many of you know and have been following all their education over these years, are my personal go-to experts on the topic of seller financing and note investing that we're going to be discussing today. Mariska is a note buyer, a cash flow consultant, and a fellow broker with me, and a lead coach in my VIP education community, which is established to train brokers skills beyond traditional real estate transactions. And this is one of those skills today that everybody needs to be aware of. And additionally, today, our main guest is Mr. Bob Repass, who is the managing director of Colonial Funding Group and also one of the leaders of the Seller Finance Coalition, currently lobbying for HR 5614 that he is going to fill us all in on today and why the Seller Finance Coalition is important. Bob is a 20-year veteran and expert in the seller finance, mortgage, and distressed asset industry. And over the course of his career, he has purchased over 40,000 performing and non-performing mortgage loans, totaling over $2 billion in volume, giving him an unparalleled track record in the industry. So, Bob, welcome. And Mariska, welcome. Thanks for joining us today.
Excited to be here.
Happy to be here.
Excellent. Excellent. Well, Bob, Mariska and I are going to both be asking you some questions today, but we kick off our podcast every week with the same question. And so, Joseph, take it away and let's get started.
Awesome. Bob, we would love to hear how you grew up, where you grew up, and how that led you to this crazy world of real estate investing. And if you want to dig into some details, we'd love to hear those.
All right, I sure will, Joe. I appreciate it. And again, thank you for having me on here. This is exciting. I'm calling you guys here from Dallas-Fort Worth, Texas area. So I'm excited to be talking to you guys up there in the Pacific Northwest. So I got started in the seller finance space back in 1990. I graduated from college in the early 80s and entered the consumer finance business and went to work at a bank and did all the typical financial services type stuff. And in 1990, I kind of wanted to get out of that quote unquote corporate environment and get into a little bit more of a commission type play. And I went to work for Metropolitan Mortgage and Securities, which interestingly enough was based out of Spokane, Washington. So I was pretty familiar with that particular area of the country. And for years, Metropolitan was the, we'll call it the 800-pound gorilla in the seller finance space, buying discounted mortgages. But most of their business was in West. It would be west of Texas area. A lot of the Washington, Oregon, California, Idaho type product, and they wanted to expand to the East Coast. And at the time, I was living in Raleigh, North Carolina, and I did an interview, and they decided they wanted to open up an office in North Carolina, and they hired me to do that. So I started with them in 1990 and basically got involved with buying discounted mortgages, mostly seller finance, which is basically a typical mom and pop type transaction where someone who owns a house sells it to someone and takes back the terms and collects the payments. And I did that to 1997, and then Metropolitan decided they wanted to have everybody move to Spokane and centralize all the operations. And at that time, I really had no desire to move to Spokane. I'd been there twice a year, every October and every April, and it seems like every time I went, it was snowing. So I was like, well, I'm not going to do that. So at the time, did have an opportunity to join the Associates, which is based here in Dallas. So I relocated my family to Dallas in 1997, and I opened up the private mortgage operation, which was similar to exactly what I was doing at Metropolitan Mortgage. We were buying discounted notes. And actually at that time, that's when I met Eddie Speed, who owns Colonial Funding Group. And those of you that have heard of Eddie, he also obviously owns Note School. And that's where I got to meet Mariska and Larry, probably, I don't know, Mariska, was it 3 or 4 years ago now?
I think it's been a few more years than that, but yeah.
Like just the other day, Mariska.
I know, right?
So I was working at Associates. I was buying a lot of deals from Eddie, and things were going great. And then in 2000, Citigroup bought the Associates, and they decided they really weren't familiar enough with the discounted note space. And I was fortunate enough to have been doing business with Bayview Financial, which was based out of Miami. And they wanted to fill the void in seller finance and wanted me to start the operation for them. I had no desire at that time to move to Miami. My son was getting ready to enter high school at the time, but they said I could open up my operation in Dallas. And we went from 6 people to a peak in 06, 07 of about 120 people. We were buying, I don't know, $400 million a year at least in seller finance. And we were going pretty strong. And then obviously 08, 09 hit. Bayview's strategy was securitizing not only the seller finance, but commercial origination, scratch and dent, Fannie Freddie products. So our liquidity kind of dried up, and we basically ended up becoming a loan servicing operation because we owned all these loans. And we also started servicing for third parties. Bayview Loan Servicing is still around today, and they're still thriving. I stayed with them until 2012, running their loan servicing operation in Dallas. And then, as I said, I've known Eddie for years, and Eddie and I met, and he's like, we want to get into the capital space where we can raise money and not have to rely on institutional capital. So that's what we did with Colonial Capital Management. And we started our capital funds. And right now we currently have about 25 million under management. And we're still active every day buying and selling seller finance, as well as scratch and dent, reperforming loans. And I guess that's it in a nutshell.
What's scratch and dent?
It's a fancy word for subprime.
Okay.
There's all this inside lingo, Julie.
Scratch and dent is kind of, it's got a little hair on it. It's either a bank or a mortgage company origination, but it doesn't qualify for like Fannie or Freddie. So they're not going to be able to sell it at par or anything close to that. So it's got a few dings in it. So they refer to it as scratch and dent.
There you go, guys. That's your new term for the day. Before we jump in, Mariska, before you start your first question there, can you just, tell us, we're talking about how, for those that are listening, how do you buy a discounted note? Is that, that's your business, the buying discounted notes? Without going into detail, because we're going to jump into it further in the podcast, what exactly does that mean that you guys are buying a discounted note? So let's say somebody seller financed the transaction and they took back the terms and they acted as the bank when they sold their home or their property. And then they, sell that note to you guys?
Is that to me or to Bob?
That's to Bob.
Okay.
Yeah, they sell it to it at a discount. It's all about the time value of money. So let's say I sold the house to you a year ago and you owe me $90,000 and I've collected 12 payments, but I need my money for something else. It could be to invest in something else. It could be to put somebody through college. It could be, whatever life experience has happened that I need a lump sum of money instead of $800 a month. So I can sell that loan at a discount, meaning I'm not going to get $90,000 for it. I may get 80% of the balance or 85% of the balance, depending on, how many payments have been made, the value of the property, what kind of credit the borrower has, et cetera. But that's pretty much buying a loan at a discount means you're not paying the face value of the remaining balance of the loan.
Well, Bob, I think you're going to be pretty popular forward here.
There you go.
No doubt. Well, that's why we want to have you on today. So, Mariska, let's just kick it off here and let's go a deeper dive into getting to know Bob and all about seller financing, the Seller Finance Coalition, and note investing. Go ahead.
Yeah, absolutely. But before I do, I just, I was sitting here listening to Bob's story, which I've heard, of course, a few times. But, it's kind of interesting, Bob, even though we've known each other for a number of years, we actually were connected years before that because I started out as an RMLO working for the associates. I don't know if I ever told you that. And then later I used to broker loans to Metropolitan and Bayview, actually in the subprime space. So we actually go back farther than we know.
There you go.
Anyway, one of the things that, we've kind of been talking about up here, and I know you've been very active in, and thank you for that, but is the thing around the Seller Finance Coalition. So would you mind just kind of sharing with everybody, why was the Seller Finance Coalition established in the first place? Why do we even need it? And what's its mission?
Okay, sure. So when prior to 08, 09, when we had the, I guess we refer to it as the mortgage crisis, the housing crisis, if you were doing a seller finance transaction, you could do unlimited transactions in a 12-month period. In other words, if I had 100 houses that I owned and I could find 100 buyers and we could agree on terms, then I could finance those houses and collect those payments. Well, when the SAFE Act and Dodd-Frank came along, that went from unlimited down to 3 in a 12-month period, unless you became a licensed RMLO or engaged a licensed RMLO. and then had to go through all the licensing, testing, audit requirements and such. So part of the problem at that time was the Seller Finance Coalition did not exist. So what that meant was we didn't have a seat at the table when all these decisions were being made, and we just got kind of lumped into this umbrella of regulations. So they like to say in DC that if you're not at the table, then you're on the table. So we were definitely on the table, and we got beat up pretty good. You can imagine going from unlimited transactions to only doing 3 in a 12-month period without having to go through all this regulation, licensing, et cetera. Took a lot of private capital out of the market. People decided they'd rather become landlords, they'd rather finance commercial properties and so forth. So we formed a coalition in, I believe it was late 2014, and have been working through the last few sessions of Congress to try to get an exemption to the number of transactions that you can do in that 12-month period. This bill that we've been working on, that I can talk about as we move forward, is just focused only on the number of transactions being increased. In other words, it doesn't alleviate any of the consumer protections. You still have to make sure they have the ability to repay and so forth. It's just going from 3, and in this version of the bill that has been introduced in January, it increases it to 30 in a 12-month period if you're financing properties between $0 and $100,000, and an additional 20 if you're doing between $100,000 and $200,000 properties. The reason for that is most of the members of Congress that we've met with on both the Republican and the Democratic side realize that people in that lower price band property, the sub 200,000 and in particular the sub 125, have a hard time getting access to capital because banks and traditional community banks are not making loans in that price range. Because, believe it or not, as another unintended consequence of Dodd-Frank, they can't charge enough points to cover their overhead. So they're not making $80,000 houses. Now, there's probably some people listening to the podcast that may not, especially in the Seattle area or something, like, how can there be a house worth $100,000? Everything up here is worth, way more than that. But obviously, there's lots of areas all across the country and even all across the Pacific Northwest where there's lots of properties that are in that 150 or below property where people just don't have access to private capital. Doesn't necessarily mean they have bad credit. It's just maybe they're self-employed. Maybe the bank's not loaning on properties that size. But most members of Congress that we meet with realize that their constituents have no opportunity to be a homeowner if nobody's going to be willing to make a loan on an $80,000, $90,000, $100,000 house. And they need private capital in order to fill that void.
Yeah, that's really interesting. And I think another unintended consequence of that is, there's a big talk about, affordable housing, but why not have affordable home ownership where people can really take pride not only in their home, but in their whole community, which is ultimately going to, increase property values and help everyone down the road.
That's a great point, Mariska, and that is something that the language in this bill, which Julie mentioned up at the top, was H.R. 5614. It is known as the Affordable Home Ownership Access Act. So in other words, providing access to home ownership utilizing seller financing. So there is a big buzzword whenever you're just listening to the news or, you're on the internet about affordable housing. Everybody wants affordable housing. Well, a lot of times affordable housing really means government housing or government supported housing. It's not providing home ownership all the time. And we wanted to, again, exercise how we were providing opportunities for the underserved borrowers or the underserved communities by providing opportunities and access to affordable home ownership. So that's why we wrote the bill around the affordable home ownership. And just to give you a little background, the bill that was introduced at the end of January that we hope to be getting into the markup schedule here in April, which of course all depends on what's going on with the COVID-19 bills and so forth. But we have been working closely with our sponsor's office, which is Vicente Gonzalez, a Democrat from Texas, as well as members of the Financial Services Legal Counsel, and Jeff Watson, who I'm sure some of you have probably heard of, who is a active real estate investment and an attorney, and he's also general counsel for the National Association of Real Estate Investors. Him and I have been going back and forth with the committee staff, tweaking the language, making sure there was nothing in there that was going to give anybody any heartburn or pushback. So we feel really confident in the final version that's in there. I'm sure there could still be some tweaks when it goes to markup, but we have focused on the affordable home ownership and giving people the opportunity, because as you said, not only does it give the folks a sense of pride with their home ownership, but it stabilizes neighborhoods and it helps communities.
Yeah. All good stuff.
Oh, go ahead.
Shout out to Jeff Watson, by the way. Jeff certainly is one of our great friends here with Seattle Investors Club, and personally with Mariska and I for sure. He's been kind enough to actually fly out to Seattle and meet with us privately with some of my groups, and just want to give Jeff a shout out. We value him as well as you, and we are just blessed to actually have the opportunity to speak to you and know Jeff as well. So thank you again for guys all your hard work on that. And hi, Jeff, if you're listening. So,
Jeff, if you're listening, you owe me dinner next time we're together because of that shout out.
That's right.
I love it.
Excellent.
So, obviously, or maybe not obviously, but I mean, it sounds like, seller financing can really be a win-win for both the buyer and the seller. Are there other ways that you can think of that notes and seller financing can be a win-win for both parties?
Yeah, I mean, obviously, the seller has a need, right? And a lot of times, and if anybody's heard Eddie speak or attended any of our note school events, I mean, the seller usually either has a money problem or a real estate problem, right? So in other words, they need to sell the property because they obviously need some money, or they have a property they want to sell, but it's not a traditional piece of property that a bank is going to lend on. Again, maybe it's just a low value property, or maybe it's a mobile home land out on 20 acres somewhere that, a bank's not going to lend. So they need to move a property, but they can't get traditional financing on it. So the win-win part obviously is the seller is able to sell that property. The buyer, who either doesn't want to or cannot qualify for traditional financing. And again, I don't want that stigma to be like, oh, the only people that do self-financing have bad credit, because that's not the case at all.
No.
A lot of times it's just a hassle factor. I'm self-employed. I don't want to have to go through the heartache of my tax returns because, everybody's always trying to lower what they show on their tax returns. And they can't qualify for a traditional mortgage, but they got enough money to make a large down payment and the ability to repay. So it's a win-win for them. They become homeowners. They buy the property that they want. And the seller either solves his money or his real estate problem. And again, the other winners could be the county, the city. They have properties now that are homeowners as opposed to rental properties.
That's an excellent point, Bob.
Obviously, note investors like us, Mariska, we are able to provide opportunities for them to recapitalize and move on if they want to sell their note down the road.
That's an excellent point and something I hadn't even really thought about when you mentioned the counties and cities. I remember one time we were doing our due diligence on a note we were about to purchase, and we were calling the city because some taxes were showing up on the county side, and we were like, what's going on? And so then we called the city and found out everything was fine. But in the process, the city treasurer said, maybe I can connect you. There's this guy who owns he's like a slum landlord, and he owns like 50 properties around town. Maybe you could reach out and buy those properties from him and seller finance them to people.
Oh.
And so I never really thought about how that could actually really help the cities, but you're right.
Yeah, and that's the kind of story that really resonates when you're talking with people on Capitol Hill. Quick story, I was up there right before all the shutdown stuff. So it was like, I think it was March 11th, maybe. And Jeff and I had lunch with Congressman Lacey Clay, who is based out of St. Louis, Missouri. And it was the exact thing you just mentioned, Mirska. He was like, so you're telling me, and he is on the Financial Services Committee, and he is the ranking member underneath Chairwoman Maxine Waters. But he mean to tell me that seller financing will help get people in my district from being renters. And we said, yes, it would, and this is how. And he goes, so they would go to Home Depot, and they could fix up their house, and they could do so. And he just saw how how the whole home ownership turns into other businesses also benefiting from it. And once we get somebody like him on board, which he says he is ready to co-sponsor our bill, that is just that's powerful, because he knows what it does back home for people, and he knows the power of it, and that's what really resonates. And so that was a great meeting we had. And just to kind of tie it into your area up there, we've also had very positive meetings with Congressman Denny Heck, who is from the state of Washington. Mm-hmm. I'm sure some of the listeners are probably in his district, and if so, please email him and tell him to support HR 5614, which I believe his staff is ready to do as well. Congressman Heck is not running for re-election this year, so this is his last term, and I think he would like to go out with something that he can say benefited his district back home. And he's always been a strong supporter of affordable home ownership and seller financing.
Joe, maybe we can get him on the podcast as well, right?
Yeah.
Hey guys, it's Julie here with a quick break from the show to discuss an opportunity some of you may have interest in, which is to work more closely with me. On almost a daily basis, I get calls from investors and brokers, both new and experienced, asking me for guidance or advice. I love helping you guys out, and it keeps me on my toes too. So with that said, I wanted to let you know that I have a private broker coaching community called the VIP Education Community. And the best part is that it's 100% free. That's right, it's free to join. So whether you're a traditional broker or a broker investor, my VIP education community offers personalized one-on-one coaching from not just me, but also from my experienced broker friends with expertise in all disciplines of real estate and real estate investing. We'll teach and share our modern marketing strategies, our tech and lead generation resources, plus teach you how to identify or offer up opportunities for yourself or for your clients using techniques such as seller financing, lease options, land entitlement deals, BRRRR investing, flipping, multifamily or commercial coaching, whatever you like. We've got it all covered for you. The future of real estate is changing fast, and to stay in the game, it's time to learn about all the options you can offer your buyer and seller clients, as well as, if you want, learn how to use those skills to grow your own real estate portfolio. If you'd like more details about joining my VIP education community, reach out to me at julie@seattleinvestorsclub.com or text me at 206-910-2985 or just send me a Facebook message. My new favorite phrase is community equals confidence. So let's navigate the future of real estate together. Now, back to the show. In regards to just listening to you guys, which is fantastic, is, that trickle down effect that you're talking about there, where if people can be in homes and stay in their homes, or, that they'll go to Home Depot and they'll do things like that. If there was somebody that could write something about that, some sort of, blog post or newsletter or something, we could literally deploy that. We are very connected in the real estate investing community. We're all, we work together, all these different real estate investment clubs across the country. As I'm sure, you're working, Bob, with, all your counterparts across the country. But we could, if we could have somebody write something that is, easily shareable about how the trickle down effect, makes it a stronger case for exactly what we're talking about today, it would be awesome to use all our resources together to deploy that information, because people don't think that deep sometimes, right? And it needs to be put in their face that way. And it's, it's a great opportunity right now to do that. So, boy.
I will definitely take you up on that. As a matter of fact, the Seller Finance Coalition is scheduling a webinar with Jeff Watson and myself, where we're going to be talking about stuff like this, and we will definitely have some written material that we can share with you guys, as well as information on how to join the Seller Finance Coalition and be a part of that webinar.
Absolutely. And Mariska and I and Joe, along with our other contacts locally here and actually, across the U.S., actually, and through the podcast here, we have listeners in, most of the other states across the U.S. Happy to do anything we can. And it'd be helpful to have that information from you guys for sure. So let's do it. Let's keep moving on here so we can learn some more. So Bob, are there seller situations where seller financing works best for? I mean, do we need to focus only on the low dollar type of transactions like we were talking about in the, 200,000 or less, or 125,000 or less? Or how does that work for us out here in the more expensive markets?
No, seller financing obviously is available on any type property where you have a willing buyer and seller. Again, there's going to be some underlying reason on why a traditional bank loan is not going to be pursued. Like I said, it could just be a hassle factor. It could be a property that may not be a typical transaction. For example, and Mariska, you can kind of chime in here, but there was a property in Mariska's neighborhood or backyard that was a commercial property. It was a restaurant, tavern.
Yep.
That a seller took back via REO and then seller financed it to the new buyer. And at the time, they were looking to close out a fund and wanted to sell that loan. And I asked Larry and Mariska to go by there and inspect it to see if maybe we could put a deal together, which they did. And unfortunately, it sold at a higher price than what we wanted to pay. But Mariska, you can kind of speak to, what was unique about that property that maybe why seller financing was the solution.
Yeah, I mean, it was basically a house. Originally, I think it was a house, and it had been converted into a tavern. It wasn't like a dive bar tavern. It was a night. They kind of made it into a pub style restaurant, and they were just kind of had a mom and pop feel. I mean, we went in there and there were families coming in. Obviously not under 21, but there were families coming in and just having a good time. And, what a great opportunity for that owner who had grown up in the restaurant business, but, she wanted to open up her own place. And so seller financing gave her an opportunity to do that. And we would have been happy to buy that note. But like Bob said, somebody else wanted it a little bit more and paid a little bit higher price than we were willing to do.
Well, isn't it also true that there are going to be right now a lot of tired landlords, scared landlords, people that are landlords out of, they were accidental landlords, and maybe they don't want to, manage their way through what's ahead of us right now with the challenges of owning, trying to deal with tenants and so forth. And they might like to exchange their position from being the landlord to just being the bank.
The lien lord. Yeah.
What?
Being the lien lord. Yeah.
Right. And so, there's an opportunity, you think of all these people that were running those Airbnbs that are being impacted, or just like we said, So maybe they don't have money problems, or maybe there's nothing wrong with the property, but they're just tired of being a landlord, or they didn't intend to be one in the first place. And now they're worried that, they're not going to be able to be the best one to manage through this, and worried about tenants paying rent and so forth. Would you agree that situation right now couldn't even be, more of an issue?
I think that definitely will be more of an issue, in the coming, months here. But also, there's just people who, okay, let's just say they built a nice rental portfolio, or maybe they just have a house that's very highly appreciated. That happens here a lot, right? Somebody buys a house 30 years ago for $200,000 and now it's worth over $1 million. And they're looking at a big capital gains bill. And, so either for them or for the person who maybe has a rental portfolio, and they're like, you know what, I'm tired of dealing with my rentals. I like the cash flow, but I want to sell them. So what are their options? What's their option for them? It's a 1031. Well, they don't want to 1031 and exchange it for a like-kind property. They don't want more rental properties. They just want the cash flow. So if they're able to sell or finance it into an installment sale, now they can get that cash flow and extend their capital gains over a period of time, rather than just having that big lump sum. Now, I'm not a CPA, I'm not giving tax advice or anything like that, but that is the reason why some people do that.
Yeah, absolutely. I think we're definitely going to see an uptick in the burnt out landlord syndrome, as far as people trying to get out of that. And I also think you're going to see some frustrated hard money lenders.
Oh, yeah.
Hard money lenders either not wanting to take the risk in a changing market, or not being able to keep their capital deployed. So they're going to look for a steady return. And I think, getting involved in the note investment space is definitely an opportunity for hard money lenders and burnt out landlords.
Excellent point there, right? That is a good one there. So let's just back it up a little bit. Does it, what about if somebody has an underlying mortgage, or is this seller financing, just so everybody who isn't familiar with everything here, work when there's a loan in place? What if somebody has a first position loan already in place and they just don't own it free and clear? Then we're getting into what are the loan wraps and things like that. Can we still do those deals, Bob? And what do you say about that when there's an underlying mortgage?
Well, it's two things. One, when it's the initial transaction where I'm selling a property, I can do a wrap on my underlying lien. Obviously, depends on what the terms of your underlying lien are, but you can definitely, in most cases, do a wrap. However, when you go to sell that loan, if you wanted to recapitalize and you wanted to sell your loan, the underlying lien would be paid off at the time you sold that loan. All right. So in other words, if Mariska owed the bank and she seller financed the house to me, and then she wanted to sell her seller finance loan, she would have to pay off the bank once she sold that loan, so that whoever owned her loan would be in first position. And again, we're not attorneys. There's state laws that you have to follow, but it happens quite frequently that you can seller finance via a wrap. Some people refer to it as a subject to mortgage, but there are ways to do that creatively.
Good stuff there. So how about telling us, so everybody understands, because we've used the term RMLO. What's an RMLO and what's their role in all this, and how do you use RMLOs in your own business?
RMLO is a residential mortgage loan originator. It's someone that we would engage to underwrite, qualify the borrower, and prepare the documents so that we could sell a loan via seller financing. As I mentioned earlier, if currently under the regulations, if I do more than 3, I either have to be an RMLO or I have to hire an RMLO. That adds cost to the deal, which obviously most investors pass along to the borrower. And we're trying to get that increase to 30 in a 12-month period. our operation is large enough where we're going to have to use an RMLO regardless if this legislation gets passed, because we do more than 30 in a 12-month period as it is. But Mariska, I think you are an RMLO or used to be an RMLO?
I used to be. No, I'm not anymore. So we hire out. Yeah.
But I mean, I've pretty much covered it. I mean, you're someone we hire in order to facilitate the underwriting and the preparation of closing a seller finance loan.
And they're assessing the buyer's ability to repay as part of that process, just like any lender would, right? That's the point. And so is there anything different when you're dealing with an RMLO who's assessing a buyer's ability to repay that is different from when a traditional lender is making that same assessment, right?
Yeah.
They obviously that buyer, it doesn't necessarily need to be a buyer that can't qualify otherwise. They might choose to go this route again because it's hassle-free, right?
Exactly.
And self-employed people can continue to write all their stuff off, and have the opportunity to still buy a home. But what is the difference on, where an RMLO will bless off versus a traditional lender? There's got to be a stuff there that, they're able to bless off that a traditional lender cannot.
Yeah, we don't have, an RMLO would not have the, let's just say like the Fannie and Freddie guidelines of what is needed in order to document income or verify the ability to repay, right? Which is usually tax returns or something along those lines. Seller financing, for instance, a lot of times on self-employed people, we can take 12 months bank statements where we can show their income that's coming in. Various forms of documentation of income. Most of the banks, a lot of times, it's either tax returns or W-2s. And some of these people that go the seller finance route, don't have a W-2 or a tax return that supports that, but they do have other documentation, bank statements, copies of checks, things that they can show that prove that they have the ability to make the payment, within the guidelines as far as the percentage, debt to income ratio that you would need in order to prove that you have the ability to repay.
And so what about credit score? Is that taken into account with this process with seller financing?
Well, it depends. Every seller, since it's your money or your property, you can have whatever kind of, quote unquote underwriting box you would want. We like to, when we market a property for seller financing, it's typically, this house is available to a deserving buyer with a large down payment. That's what we're going after. We're not going for the broke and desperate, right? We're not trying to get somebody with bad credit who can barely put a down payment on there. We want somebody who can put a nice down payment, 10, 20% down, and can afford to make the payment. So we don't put that much emphasis on credit score. We do look at the ability to repay. We do pull credit, see what their trade lines look like. There's a lot of people that don't have very many trade lines. There's a lot of people that only have trade lines, like maybe some medical bills or some issues with student loans or something, that may drive their score down, but they paid their car payment every month. The RMLO can also verify their rent records from their previous landlord and stuff, and take that into consideration of their credit worthiness. But as the seller or the investor on that deal that you're providing the capital for, you have your own underwriting box that you're pretty much free to do whatever you want as far as what type of borrower you want to extend that terms of credit to, as long as they do have the ability to repay.
Excellent stuff here. So Mariska, let's talk about our current situation. We'll go for number 10 on, Mariska and I are talking code here.
Yeah, so we're in the middle of this pandemic. I mean, we're all here talking to each other, with telecommunications, but that's kind of becoming the norm for everybody who's still in business. But beyond that, Bob, I mean, how do you see this current pandemic affecting the note business?
That's a great question, Mariska. And if I had the
crystal ball
answer, I probably wouldn't have to be working from home, right? I could be just relaxing. But no, it has obviously impacted a lot. Now, there are a lot of real estate investors and note investors across the country that are used to working out of their house, or,
yeah,
it's not a big deal. And at Note School and Colonial Funding Group, we have 12 or 13 employees that typically come in on a daily basis. Well, right now we're all working remotely, so we had a huge challenge just to try to,
just the logistics of getting everything.
Yeah, number one for anybody listening, maybe it's not number one, but it should be close to the top, is your cybersecurity. Because as you start working remotely, or you start ordering everything online, or you start doing everything online, you got to make sure you have the proper precautions in there. So that's my number one piece of advice. But as far as what's going to happen in the note business, I did a short video, and I was going to write my article in our newsletter, but I kind of focused more on the business relief plan that just came out. But I look at it three things. And you can refer to it as UFO, right? Like the unidentified flying object. Except this is uncertainty, which leads to fear, which leads to opportunity. All right, so you're going to see, first of all, there's a lot of uncertainty. There's uncertainty with consumers, borrowers, employees. Am I going to lose my job? Have I already lost my job? Now, some of that uncertainty has been somewhat hopefully solved a little bit with the recent stimulus package, because they know that there's rebate checks coming, or there's unemployment benefits that are going to be available. So maybe some of that anxiety is going to be relieved. But most of the time, uncertainty leads to fear. And when people are fear, they either do one or two things. They make a bad business decision, or they make a good business decision, right? So you want to be in the position where you can have an opportunity. And when I say opportunity, I'm not talking about taking advantage of somebody, okay? There's going to be plenty of market opportunities just based on the fact that somebody on the other side of the table has a life-changing event where they need liquidity, okay? They need to recapitalize, or they need to get out of a property or out of a situation. So, that's kind of what we're positioning ourselves for. Is it's funny because I get deals come across my desk all the time, and I actually had somebody who were looking to buy their loan, and they came back and said, "Well, I need a little bit more money," and I was like, "Well, you should have asked for that a month ago." I said, "The market's changed. I can't even pay what I told you I was going to pay right now." I mean, the whole non-QM market's pretty much dried up in the last 2 weeks. And, there's people out there that, for example, for seller financing, there's going to be people out there that thought they sold the house because the person was going to go get a mortgage, and then the mortgage company backed out on them. Well, they're either going to lose that sale, or we're going to have to turn to seller financing. So there's going to be market opportunities. I'm not saying to ignore the uncertainties or the fear factor, but you can't let that consume you. I mean, there's plenty of webinars and podcasts and all kinds of educational materials out there to keep your finger on the pulse of what's going on in the real estate investing and the mortgage investing world that, I just think it's important. And get plugged in. If you're listening to this podcast, obviously you're already plugged in on some level. There's lots of other things, Facebook groups, there's all kinds of stuff. So just stay connected. Even though we'll have to keep a safe distance apart, but stay connected, and we'll all come out of this on the other end, and do all you can to support small businesses, right?
And Bob, do you have any recommendations for investors on, the types of sellers they should be focused on reaching out to? Is there sellers, like I'll call it like your list building type of thing. As an investor, you're building a list of, who you want to reach out to or contact through whatever your means are, door knocking, direct mail, cold calls, however you do it. Is there a certain strike zone or I would say seller profile? I don't want to use the word profile because I don't like that word, though. That might be the ideal candidate. And I'll also say that we have a lot of investors here, just for you to know, Bob, and how we can further work together with us and Mariska and all our local friends here, that we have our Washington investors want to buy property in the Midwest and these places that might be more affordable and better cash flow deals and so forth like that. So there's an opportunity for us here on the West Coast to have funds to, buy out there. We have an entire group, our friend Jennifer Beatles here locally, who has an entire platform around that. And that might be something that grows even larger these days. But is there maybe it's not the right question to ask you, or maybe this isn't your wheelhouse to ask, but as far as list building for investors who want to seek out these seller financing opportunities, which again, guys, we're categorizing this as a win-win, not being predatory or gross about this, but really is, as we've been discussing, a win-win. And we're going to be connecting here with Bob and Mariska and everybody else to help us get that information that spells it out on the trickle-down effects of the benefits of this, so it can feel good for everybody. But in regards to list building and the types of sellers, do you have any advice for us there, Bob? Like go talk to, people that are owned free and clear or have, low dollar balance loans on, sourcing that type of stuff. Is there any guidance there?
Yeah, I mean, obviously there's direct mail programs that you could do as far as, getting a list of people who have seller finance properties in certain areas. But we found, reaching out to somebody like Mariska or reaching out to someone at Note School, you're trying to build that avatar, right? I mean, you're talking about profile or candidate or whatever, but you're trying to figure out two things. One, who would be a good candidate to go source that is looking to sell product, and then you're also looking for sources that maybe can help provide you capital, be investment partners. And along those lines, there's a lot of people sitting on a ton of dry cash in their self-directed IRA. And I also think some of it is what we talked about earlier, Julie. It's the burnout landlords, the hard money lenders that can't keep their money, deployed, those type folks. But other than direct mail, it's hard just to go in and say, hey, I want a list of sellers in Kansas City that are looking to sell properties. I mean, you've got to kind of get with somebody who's connected in the network and kind of lead towards that. Mariska?
Well, also I'll say, Bob, Mariska and I are both brokers at a national brokerage firm, in fact, international brokerage firm, which is eXp Realty, which we are loving the fact. No better place to be right now, because as you were mentioning how you have 12 people in your office and the shift to keep everybody working and the cybersecurity and just the mechanics of, being able to access your information and everything you need, keeping everybody safe. My God, we could not be at a better place because of it was built for this because it's completely cloud-based. So if anybody wants to talk to me about that, please give me a call. But boy, what an opportunity for us to continue our business as usual. But beyond that, my point is that we have a national network, international even, of real estate brokers. And part of what Mariska and I are doing is our goal is to teach real estate agents who don't understand anything or aren't familiar with anything beyond traditional buy-sell real estate how to, learn this skill set and understand this and work all of us together, right? So we can deploy this message through real estate brokers and teach them how to identify opportunities where seller financing may be a fit. And, like I said, if you're a real estate broker out there and that's something you're interested in learning, contact me at julie@clinvestorsclub.com. That's what Mariska and I are very much focused on. And we're so glad to know somebody like you that can be maybe helping us with certain partnerships as we put this together and help spread the word, right? But I think that's a great, real estate brokers, everybody should be networking who understands seller financing with their real estate broker connections, because they're a great source of, I'll say, lead generation, if they can understand how to identify those opportunities and then connect with the people that can execute those opportunities. Would you guys agree?
Absolutely. I think that's a great idea. I mean, one thing that came across my mind as you were talking is, looking at people that have properties for sale by owner, they could be a good candidate that maybe seller financing can help. And if you can connect them with a deserving buyer and somehow help facilitate that transaction, I think.
Think about how many real estate brokers across the country right now are reaching out to their clients or having people call them, right? So instead of going to some service to try and build some list, maybe everybody should start networking through, their real estate broker contacts and, making sure that they know that they're a source of education and opportunity to help through understanding seller financing and note investing. It's an opportunity for brokers to level up, honestly, right? And intermingle with the investor crowd. We are, to help each other right now.
I agree 100%.
Well, good stuff. Well, we don't want to keep you on forever here today. It's been almost an hour here, Bob. I don't know. Did you say that you had done a video, or if there's anything messages that you've done, like videos or so forth, we would love maybe even send those to Mariska so we can deploy your videos or whatever we can that you're willing to share with us to our group. We are quite, we have pretty well connected here, especially in the Pacific Northwest and through this podcast, which is national. And like I said, we want to do everything we can to start educating everybody, because seller financing, note investing, start of the things that I'm even talking about is, like we said, connecting with people like you that might be able to help fund some of those, buying out first lien positions, or, even opportunities maybe for investors to group together as note buying, note buying groups, right? And I know you guys have been training and you as part of note school and all that for years. And, we want to be able to plug everybody in to be further educated about this, because it's going to be important to keep the wheels churning here as we go forward. It's a, very viable and a win-win, as we're all talking about here together. This is all about a win-win, guys, not being grossly opportunistic, right? That's how we want to spread this message. That's how I want to spread this message. And I know Mariska and Bob, I'm sure, feel the same way. So where can people follow along, Bob, with what's going on with the Seller Finance Coalition and, continue to be educated? Beyond the fact that you guys are all welcome to stay connected to, of course, Mariska and I, in regards to the trainings that we're going to be doing here on this topic as well. But Bob, where can we find out more about Seller Finance Coalition and stay plugged in?
Okay, and I'll definitely forward some of the information to Mariska so that she can circulate it. But for some of the videos and newsletters, you can go to my LinkedIn page, Bob Repass, and there's available there as well. If you want to know more about the Seller Finance Coalition, just go to sellerfinancecoalition.org. And there's updates, there's copies of the bill language, copies of who our sponsor is, our call to action. And we'll have information up there about the webinar that Jeff and I are going to do, which I believe is going to be probably a week from next Tuesday. So I don't have that date right in front of me, but I'll get that information out so you can help circulate that. And then obviously, if you want to know any more about Note School, you can go to noteschool.com. So Bob Repass on LinkedIn, sellerfinancecoalition.org or noteschool.com, and we can make sure we get any information we need to, or reach out to Mariska, and she knows how to get a hold of me whenever.
Great stuff. And for any of you, like I said, that are listening, that either want to have additional training on this and topics on this, please go to meetup.com and search for Seattle Investors Club and join our meetup group, where we will be having ongoing trainings on seller financing topic. If you're a real estate broker and you want to learn how you can work and be able to identify seller financing opportunities for your own business and how you can service your clients, please reach out to me at julie@seattleinvestorsclub.com, or simply jump on one of our weekly meetups as well. So we have an online weekly meetup for Seattle Investors Club, and that's a Zoom link and a Zoom meeting that can be accessed each week. Joe, is that a different link each week then? Will they need to go and grab a different link each week, right?
Yeah, so each week there will be a different event with a link that will allow them to get into the meetup. Technically, it's without getting into the technicalities of it, it's a reoccurring event, but they still have to go and get the link each time.
And so that online meetup, guys, is every single Thursday at 11:30 a.m. Pacific time here. So you just go to our meetup page, search for SeattleInvestorsClub.com, grab that link on a Thursday morning and join us. We're talking about all kinds of things, such as should you be trying to take the mortgage forbearance options? Should you participate in that if you don't have to? No, you shouldn't. We're talking about how the eviction ban is affecting, the people that have rentals. We're talking about all kinds of stuff, seller financing, creative strategies, and just keeping plugged in on our market. And we would welcome you all to join us again every Thursday. And if you have a guest that you would like to hear from or a topic you'd like to hear about on this podcast, just give me a shout at julie@seattleiinvestorsclub.com. Through this podcast today, I think what Bob pointed out, which is very valid, is cybersecurity. So we're going to go out and find a cybersecurity expert to come on the podcast. Thanks, Bob, for that. We owe you one.
Absolutely.
And I want to remind you guys all, and Joe, if you could drop the podcast that we did with Joseph Kidworth of the Kidworth Group, which is a credit counselor, and some of the tips on how to maintain and your credit at these times. We're going to get Joseph back on as well to help us navigate through this new world that we live in regards to credit, and anything that he wants to share with us in regards to helping us keep our credit straight these days, because that's going to be important, especially as investors, where you're going to want to protect your ability to borrow money, right? We're talking about seller financing today, but we also want to remind you all that you might want to borrow some money in the future, and you need to protect your borrowing power as well. So all good stuff today. And Bob, thanks again. And Mariska, of course, my sister from another mister. I adore you. And I can't wait to continue on training everybody on the benefits of seller financing and note investing. And that's all I got for today, guys. Oh, I do want to remind you guys all that right now it is March 31st, but if we are able to go back to normal life at any point this summer, I want to remind you how important it will be to plug in. And that one of the best places that's going to be is at the Pacific Northwest Big Badass Real Estate Expo. That is happening. I believe the dates are July 10th through the 12th this summer. And if we're able to and it's safe, we hope to see you all there, where you will be just jam-packed full of information. And it's a great place to reconnect with everybody that you haven't been able to connect with, during this time of our lockdown. I hope that we're able to all get together at that point, but please, go check that out and check in on that event and get your tickets is what we are saying. So with that said, thank you very much, everybody. And that's a wrap.
Thank you so much. Good to talk to you, Bob.
Thanks for having me on, guys. Appreciate it.
All right. Thank you, everybody.
Thanks for listening to the Seattle Investors Club podcast. If you have questions that you'd like to have answered on the show, shoot us an email at info@seattleinvestorsclub.com. Now go out, take that action, and build that real estate business. Thanks for listening.